Hey folks, Dan Frio here, the rate update. Today is June 30th, 2021. I'll be leaving for the weekend. I have a funeral to attend tomorrow, and so I'm making my 4th of July weekend, taking off a little bit early for that. So what I want to talk about today, though, is housing numbers. Unbelievably crazy. And mortgage applications. There's a lot of conflicting data out there, and we're going to cover it all next. Don't go away. Okay, housing numbers came out and they are fantastic. Check out the news from Diana Olick from CNBC right now.
Pending home sales out a few moments ago. Diana Olick's got that. Diana?
Carl, pending home sales jumped an unexpectedly high 8% month to month to the highest May reading since 2005. Even the realtors say they were surprised at this one. The street was looking for a 1% drop. Sales were up 13% year over year. Of course, you recall sales started to bounce back last May after the pandemic-induced lockdowns. Pending contracts are a forward-looking indicator of closed home sales. The realtors' chief economist points to lower mortgage rates, which fell sharply in April and then held in a narrow range throughout May. Still, sky-high home prices have been a major concern. In April, the much-watched S&P Case-Shiller index up over 14% year-over-year, the largest gain in its 30-year history. NAR chief economist Lawrence Yun said while these hurdles have contributed to pricing out some would-be buyers, the record-high aggregate wealth in the country from the elevated stock market and rising home prices are evidently providing funds for home purchases. Now, regionally, pending home sales were up across the nation, jumped the most in the Northeast and in the West. One note, though, these are May numbers. We have seen mortgage applications to buy a home drop steadily throughout June.
Okay, so there's two things I want to review with these numbers. One is one reason for the really high numbers. Well, there's two pieces of this part. Is May, June, July, and August are the 4 hottest months in the year for buying. Not temperature-wise, even temperature-wise. But those are the number, that's that segment of time where most people buy. And the reason being is because that's that sweet spot in between school for kids. So you don't want to move in December when the kids are halfway through school, you're pulling them out of school and messing all that up. So that's number one. Next thing is you can't really compare it to May of 2020 because there was nothing going on. You couldn't look at houses, you couldn't go visit, realtors weren't doing anything, there were virtual tours and all that other stuff. And then also, I think the numbers could have been even hotter if we didn't have the forbearance agreement in place right now. So those are the three components in this. But she also says mortgage applications are way down. Not necessarily. We have hundreds, if not thousands of people pre-approved. Okay? You don't have to get pre-approved every week. So the building up to this point, we probably have over 1,000 people pre-approved in our databases. And those people are looking for homes. A lot of people are getting frustrated with the process because they just can't find a house. So let's go over some headlines, and then we're going to go over what the MBS market is doing in reaction to this. And then I'm also going to give you a crystal ball into what's going to happen the next couple days. So let's get into those areas right now. I follow CNBC a lot. Diane Olick, she is basically their real estate correspondent, and she comes out with good news, but she's always got to kind of throw a monkey wrench into the thing. But she does her best in what she does. So you have in the headlines there is pending home sales jump 8% month over month from the highest level since May of 2015. How I know that is because it's down here and it was also in the report. Weekly mortgage demand falls nearly 7% as home prices growth hits record high. I don't think that's why mortgage applications are down. And then a housing boom begins to fizzle. Weekly mortgage demand falls nearly 7%. I don't know if it's a scare tactic or what they're doing here, but the housing market is cooking. Mortgage rates are basically steady for the last couple months. So you don't have anything there. So I don't really know. I think the housing market's even going to get better and better and better on the purchase side of things. Now, the thought on the values of homes, they're going to start to stabilize. And go back to my video from yesterday, and I kind of went in depth on why I think home prices are doing what they're doing. But more and more houses come September are going to come on the market. And there might be in the tunes of, thousands and thousands and thousands because of the forbearance agreement in place. So that's that. But what I want to get to right now is to give you an insight on what this week's going to look like and how not to freak out if you get headline news from places saying mortgage rates spiked or mortgage rates just plummeted. And here's why. Let's go to why people follow me on a daily basis. They do that because of I follow the mortgage-backed securities market. You might be saying, who cares? What is the mortgage-backed securities market? Great question. If you're interested in mortgage rates, you got to know what the mortgage-backed securities market is. This is a bond that trades on Wall Street that is the biggest component of your mortgage rate. Okay, what this tells you right here is what's happening to the price of that mortgage-backed security or that bond. As a price of a bond goes up, the yield, or in this case, your mortgage rates go down. So you can see over here, well, we're up 5, which is great. I'd rather have up 5 than down 5. Up 5 isn't going to really change the market or change any interest rates. But what I like here, though, is the trend that we're seeing right now. You're seeing an upward trend right here. Okay, we passed over this this level right here, which is the 25-day moving average, and we closed at it. Okay, and then right now we're over that mark. Why is that important? Well, let's break this down. I'm going to get rid of this trigger right here. Okay, this is what's the trend of what's going on with the MBS market on the price. So again, remember, when this number goes up or this chart goes up, mortgage rates are coming down. Okay, when they go down, mortgage rates are going up. All right, so what I follow here is Fibonacci levels right here. If you know anything about charting, those are resistance levels. And they go straight across right there. We're in a pattern which we're staying inside those Fibonacci levels. Perfect. So then when we try to dissect even further, we have these numbers here, or these little charts here, that's the 100-day, 50-day, and 25-day moving averages. Okay, you can see how they all correspond right in this region right here. All right, well, that's pretty cool. But the even cooler thing is if you look at the 25-day moving average, which is right here, we stopped there yesterday, but we went above it, and we're above it today. So if we stay above that, we can rally up a little bit. But the nice thing is it starts to create another Fibonacci floor right here, which would put us in a trading range right through here. Okay, and currently we're trading at the bottom of that range. But again, remember, as this moves up, mortgage rates come down. So the trend here that I'm looking at is saying we're going to stay steady, or mortgage rates are going to get better. Okay, and here's what's happening intraday so far today. We started out, we went up, and then we're starting to come back. All right, so I don't like this candlestick, but we're all over the board right now. The economic calendar for today was ADP numbers came out. ADP numbers killed it. I mean, they did better than expected, but they did less than where we were last month. So last month we were at about 1 million jobs created, and this month we had 692. I thought we were going to be in the 800 range, but that's not in the cards right now. Pending home sales, we heard Diane, she talked about that. But here's what's going to happen in the next 2 days, 3 days, over the weekend. You're going to have everybody on Wall Street, or a huge portion of them, starting to take off tomorrow around noon and go away for the weekend. All right, what's that going to do? There's nobody going to be working. So anytime somebody puts a sell-in order in, it's going to really plummet this chart because there's not enough people there to pick up that purchase order. Because what happens is there's supply and demand. Okay, you have somebody that goes in and sells something. Well, there's not a lot of people to buy it, so that price is going to change dramatically. I'm not trying to confuse you, but what I'm saying is no matter what the markets do Thursday and Friday, it's going to be overemphasized or blown out of proportion of what it normally would do. So let's say, for example, the market, some bad news came in and the market normally would go down 10 points. So let's say the MBS market would go down 10 points. Don't be surprised if you see maybe a 20% drop or 20-point drop because of the lack of participation on Wall Street. And the same could go the other way. We might see some numbers come in that are concerning, and that'll push down mortgage rates, and it would push them down further than it otherwise would have because of the lack of trading, okay? But tomorrow and Friday, we're going to see some huge numbers. And these are the numbers that the Federal Reserve is concentrating on. Their two mandates that they're focusing on right now are basically inflationary controls or price stability and job. Basically, they said they're throwing out the inflation factors. Their number one concern is the job market. So the numbers coming out tomorrow and Friday are all about the jobs market. So we see on Thursday, we have continued jobless claims and then initial jobless claims. And then, so those are the jobless pieces. And then on Friday, we start seeing the unemployment rate. Okay, how many people are unemployed? Then we start seeing earnings, okay, and non-farm payrolls. These are the biggest numbers that the Fed watches. So again, if these numbers are a little out of whack, it's going to affect the markets, but that number is going to be blown out in excess. I know that's not it, but you get what I'm saying. If it would have went up 5, it's going to go up 10 or 15. If it was going to go down 5, it would go down 10 or 15, maybe 20. So if I see mortgage rates plummet, I'm going to be calling into my office and locking a ton of people, because come Monday, Tuesday, Wednesday, by Wednesday or Thursday of next week, we should probably see everything flatlined again as we saw. So this is just one of the services that we do here. I monitor the rates on a daily basis to make sure you guys are put in the best position that you can. So I'm asking everybody, if you're looking to build a house or buy a house, please reach out to us. We have programs that will offer rate locks up to a year in certain states. And we have the ability to do everything basically from the palm of your hand. You can apply for a loan here, put all your documents here, sign all your documents here, and you can have knowledge of what's going on with your mortgage application basically from start to the day that you get your keys in your hand. If you don't want to do it that way, you can call us, you can email, you can do this from your desktop, you can do it any which way you want. We're trying to make this as easy as we can for you. The next thing is, if you're looking to refinance, if your rate's 4 and above, please call us. We can probably save you money or cut years off of your term. If you're in a forbearance, I'm going to stop there. Do me a huge favor, get your forbearance paper that you received and just call us. You'll reach either myself or one of my 12 consultants, and we're all abreast on what's going on with the forbearance markets, and we can guide you on a path to how to get out of that forbearance agreement or what to do after the agreements has been concluded. So how do you find out more about me and my team? What I ask people to do is please give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. Where do you find all that? You find it at the Rate Update with Dan Frio on YouTube. There's over 900 videos here that you should find some information on that you like. And if there's a video that you want me to do, please just leave it in the comments below or email me, and I'll give you that information here in a second. The next thing is go to our website. We make it as simple as we can. Up here, you click here and you start the application. You're looking to buy a house or refinance. You click it, and this is going to take you to the mobile app, and it's the same thing is on your desktop. Okay, so that's how you can do that. If you're like, I just want to call, I want to talk to somebody, there's 2 ways to do that. You can go down to the bottom, and there's our 800 number, 844-775-LOAN. Or you can scroll up a little bit because it's the holiday weekend, and maybe you're seeing this on a Saturday and we're not open. You can schedule an appointment, a 50, 30, or 60-minute consultation with me. Just click it. It'll open up the days and times available. You can click that, and then you can pick the time. I'll get a notice, you'll get a notice, and I'll see you at that time to answer any and all the questions that you got. So thanks so much, guys, for watching. I won't be posting in the next 2 days. I will be out of town attending a funeral. So God bless, take care, be safe, and I'll see you next week. Happy 4th.